Hello everybody, welcome to another one of the Oxford Economics occasional podcasts. I'm Gabriel Stein, Director Asset Management Services of Oxford Economics, and I'm sitting with Dan Smith, Special Advisor and our expert on metals in particular. And we are going to talk about gold today, and I have strong views on gold, so I will be taking much more part in the discussion than perhaps I normally do. But let me begin by asking Dan, we have seen the gold price fall quite sharply recently. Where is it now, and what's your comment on this?
Yeah, I mean, so gold's about 40% down from the peak in 2011, and it's fallen by about $100 in the past month, down to just under $1,100 an ounce. So looking pretty grim from a price perspective. I think there's several reasons for it really. One is we have seen a kind of very sharp move across the commodity space, driven by two key things really. One is the dollar, of course, has been incredibly strong, which has weighed on the whole complex. But also people are very concerned about the pace of demand growth within China. So that's the common theme across commodities. I mean, in terms of gold itself, I think there's couple of key things to think about at this point. One is that we did see some data from the Chinese central bank where a lot of people were expecting that their gold reserves would have climbed significantly since they last reported in 2009. That didn't actually happen, so they've gone up by about 60%, but people were expecting it to be a lot higher than that, given that they last reported 5 years ago. The second thing is that investors have been cutting their positions in gold pretty aggressively in terms of US exchanges, so those speculative positions are now at their lowest level since at least 2007. They've never actually gone negative, but they are at a point now where they're threatening to do so. So there's no doubt that gold's done badly in terms of prices, and people are pretty negative at this point as well about the short-term outlook on gold.
So we could be headed to a gold bear market, obviously. Is that correct, by the way? Before I say obviously, that sounds like our main forecast. Are we headed for a gold bear market? Or a deepening of the bear market?
Well, it does feel to me that commodities and gold have not quite got to that point where everybody sees them as cheap. So the interesting thing about gold is we did see a sharp move down in gold a year or two ago, and that resulted in a huge surge in physical gold demand in places like India and China. So we have seen a little bit of that this time, but not to quite the same extent. So the Asian physical market is not responding as positively as it was in the past. So I actually think we will see lower gold prices in the short term, probably in the next 1 to 3 months. You know, it's been talked about for a long time that gold will go back down to about $1,000 an ounce, and it does feel like the market wants to move in that direction next. So I think we will see weaker prices for the short term. Further out, we are relatively optimistic that we'll find a floor soon, but sentiment is pretty bearish at this point, and I have to say I wouldn't be too optimistic about the short term.
Well, I want to latch on to a couple of things you said. I have, as I mentioned, I have very strong views on gold. There are two reasons for this. One is, of course, we have the gold bugs, the people who persist in believing that gold is the only sound basis for a monetary system and we ought to go back to gold. I always find this amazing, because the truth is that there just isn't enough gold to have a gold-backed currency. I once did a calculation that if the United States laid its hand on all the gold that has ever been mined throughout history, including all the gold leaf on pictures and everybody's wedding rings and what have you, and if they had 20% deflation, then they could have a fully gold-backed currency, but there wouldn't be any other gold in the world than that. So that's to me, the idea that you can go back to having a gold-backed currency is silly. But there is another perhaps more persistent myth which you encounter, and which recently has been encountered again, and that is gold as a hedge against inflation. There is no need for gold to rise, say the commentators, because there is no inflation, and the reason gold rose in recent years is because people were worried about inflation. That actually is also a misunderstanding. Gold has never been an inflation hedge. During the gold standard, gold was a hedge against deflation. And it seems to me that the behavior of gold over the last 4 or 5 years, you mentioned a peak in 2011, it seems to me that this implies that gold is still a hedge against deflation. In other words, people would invest in gold because we were entering in a deflationary world, and now we are not in deflation and we're not in inflation either. And there is therefore no reason to buy gold, which of course has no yield. But I suppose the question is, well, why would anyone invest in gold at all in that case? And I think the answer is, and this is another of the points you made, which is gold has weakened because the dollar has strengthened. And this, what this means to me is it points to the role of gold not as a hedge against inflation, but as a hedge against the dollar. And if the dollar is strengthening, and since you can get a return on dollar assets, why would you hold gold? And so since the Oxford Economics view is that the dollar will continue to strengthen, that would presumably reinforce your view that gold, the price of gold, will continue to weaken.
Yeah, absolutely. I mean, you touched on quite a few good points there. I mean, certainly, you know, in terms of dollar strength, that's bound to weigh on the gold price for the time being. I mean, in terms of gold's role within the financial system, I mean, I agree with you. We have to recognise that you can never go back to the gold standard because the world is so much bigger than it was in the past. But I don't think that means that there isn't a role for gold within the financial system. So I think a lot of countries recognise that gold does have a role to play in terms of providing confidence to back up a currency. You know, we've seen countries like Russia and a lot of the Eastern Bloc stockpiling gold recently to support their economies and to support their financial systems. And as you say, China has built up a lot of its gold reserves in the past 5 years, albeit disappointing compared to what people thought. So clearly the emerging world feels that there is a strong need to increase their reserves in gold. So I think that does give us a strong signal that at the right prices people are still interested in stockpiling gold regardless of the historical picture.
But I mean, if you look at gold as a reserve asset, from a Chinese perspective, it's perfectly understandable. The Chinese are very keen for the RMB to become, probably not to supplant the dollar as the global reserve currency of choice, but over the near term at least to become a regional reserve currency. And if you are the issuer of a reserve currency, why would you want to hold any other currency as a reserve? No, in that case you hold gold. So from that perspective, the increase in the Chinese gold holdings, although disappointing, makes sense. They want the RMB to be a reserve currency. That means they will hold gold. And also they presumably don't want the millstone of trillions of dollars as a reserve currency. And it's significant, for instance, that countries like the United States, and of course the dollar is the world's reserve currency, they don't hold any other foreign currency reserves, or very, very limited. Something like 70 or 80% of US reserves are gold. But I'm still somewhat skeptical about this idea that gold can back a currency. I suppose if everyone believes that gold can back a currency, then that is a self-fulfilling belief, and gold can back the currency. But if we were to take this one step further, let us say that a country, for argument's sake Russia, we know that they have a huge stash of gold with which to back up their currency, and let's say that for whatever reason there was an attack on the ruble, there was concerted pressure on the ruble, and you are a dealer in the markets, and suddenly the rumor begins the Russians are reduced to selling gold to prop up their currency. Would you see that as a sign of strength, or as a sign that now it's all over, now the ruble would go in free fall, or whatever the currency might be?
Yeah, I mean, that's a good question. I think what we've seen in a lot of countries like Greece and Portugal is often they do have decent amounts of gold reserves, but they're terrified to sell it because it gives the wrong signal to the market that actually they're selling the only thing of any value. So you're right, it's a kind of it's a double-edged sword in the sense that people recognise there is a value in gold, but they don't like to sell it at the times that, you know, in times of crisis. But nevertheless, I think there is, you know, gold does have value in terms of providing stability and acting to support in certain areas.
So basically, the gold can stabilize provided it's not used to stabilize.
Exactly.
Well, that's an interesting comment, and I think actually that's probably a good one to end this on. But to sum up, Dan believes, and I agree with him, that the price of gold is likely to come down somewhat further. We disagree on the role of gold in the financial system, but I think we do agree that as long as it's not used, there may well be a role for it there. Thank you all very much, and we will be back with further podcasts in coming weeks.